So we're all here because the common conversation today is about cryptocurrencies and Bitcoin and all these things. And the common thing that I hear is, "Oh, I can't afford it," or "I can't afford to lose money on something I don't understand. I don't trust it." Um, you've all heard the same things. So we're going to cover this stuff really quickly. First, I'm going to tell you a real fast story about. I ran a company years ago and had an employee that I kept asking him if he wanted to get in the 401k program because we matched the funds. He says, "Well, I can't afford it." And I asked him, I said, "Do you have $8 on you?" He says, "Oh, yeah, what do you need?" And I said, "See, you have $8 on you. So we could essentially do an $8 deduction. With the matching, you'll get $14. And you won't even be missing $8 because that's pre-tax money. So what you'll be missing out of your paycheck is actually less than that, and you'll save like $14 a week." He said, "Yay, hooray, okay, let's do it." So we went ahead and did that, and he had $700 or something in a year, and he was just thrilled. And later on, I think he cashed it all out, and to be honest with you, I think he's in prison right now for check fraud. So I don't know where we went wrong with him, but anyhow. The point is everything is in its real early stage right now. So you don't have to have thousands of dollars to buy into Bitcoin. You don't have to buy entire units of Bitcoin. You can buy fractional amounts. You can invest with $2 if you want to. You just have to follow the instructions and do it the right way. And you never know. You might have something after a period of time that you didn't expect that you would have. So we get into the discussion here. If you can't afford it or whatnot, a lot of you have a tray like this at home. You carry cash. You have change that you have laying around the house. You might have a jar like this. I won't even guess. Maybe that's a $25 worth or something like that in a little jar. And never mind, that might be a bra or something on the left there. Please ignore that. But anyhow, if you're into carrying change around, dropping them in a box, occasionally a few Legos here and there, then you might have something that you can casually drop into a cryptocurrency account and just see what happens with it. Now, a somewhat general guideline, if you're comfortable doing something with it rather than nothing, a pretty good guideline or a guess for what can I risk, what can I do. I'd like to say like 20% of a paycheck. 20% of one paycheck. Is an amount of money that you're essentially risking every week on a possible flat tire or locking yourself out of your car or your house, or you've seen it over and over again where little things just get in the way in life, and you're essentially risking that much every week on other things anyhow. And to be honest, you really won't miss it. Now, if your weekly paycheck is only $400, that $80 is going to hurt. So it's going to be up to you, but you will heal from it quickly. So if you would like to have a guideline, you can get rid of some of your spare change, sell off some Legos if you want to, do whatever's necessary. You can even spice it up a little bit with, say, 20% of a paycheck. Do it once a month or something like that, and add to the fund so that you have something so that you have something in there, and so that you have a part of the conversation that's ongoing. And you never know. Bitcoin is worth thousands of dollars now. You wonder if you missed the boat. You didn't really miss the boat. It's still pretty early in this whole ecosystem, if you will. There's hundreds and hundreds of different coins out there that range in cost from 5 cents up to thousands of dollars, and we don't know yet which coin is going to be the big winner in the end. If you're old enough to remember, there were early search engines like Lycos and Alta Vista, and they were the big great things at the time, and that was before Google even came out to be, and they took over, and that was the big one, and they still are the big one. So you never know, what's gonna pop up out there, and you don't know what's gonna get you a good score in the future. So just to touch on this, so that that you're not necessarily dealing with it's all Bitcoin all the time. There are lots of other coins out there. In fact, on different blogs, there are people that'll recommend 5 different ones all the way up to 20 different ones. There's all kinds of different coins out there, and you can invest, especially if you're pretty casual and you just want to throw a little bit in there and just let it ride for a long time. You can pick from any number of different types of coins that are out there. This list here isn't necessarily that list. This is a screenshot, but there's lots of different coins that you can get invested in that they might move 1 or 2% at a time. Some of them might move 20%, 50%, 80% at a time. It just depends on what's going on, and if you have any investment in on a regular basis in lottery tickets or gambling or anything like that, you can look at it this way, and you can move that money instead of into the gambling things and lottery tickets to something like this that really could, over the period of time, create a huge difference in your life. You just never know. There's people that invested $100 or hundreds of dollars 7 or 8 years ago in Bitcoin that are millionaires now just from that. So we don't know where it's going to go. So what I'm going to recommend is that you just do a little bit of homework on how to set your account up the right way and how to get everything secured, and gain an understanding of how to manage wallets and how to store the currencies once you buy them. You don't want to keep them on an exchange all the time because they're kind of out there in traffic. If you want to buy and hold and forget about it for a while, you're throwing a couple $100 or a couple $1,000 at it, and you just want to see, if 2 or 3 out of the 20 that you might throw a little bit of money at can make it somewhere, then that's what you do. So anyhow, so just do your homework, learn about how to set up an account. It's a little bit tricky sometimes with verifying identification and all those things. Just be patient with the process, and then you can watch this channel or tune in to any number of other places where they're going to recommend lists of 5 or 10 or 20 different alternate coins, and that's what these are called. They're called altcoins. Anything that is not Bitcoin or Ethereum really are considered to be like alternative coins or altcoins. So you can pick from them, and then just dip your toe in the water and see what can happen from there. Okay, so on to the next frame here. If you'd like to know, when might be a good time to get in, or if the one that you're looking at is too high or too low, or you think it's inflated, or you think it's on its way down, one good rule of thumb is, as long as you choose a good solid coin, something that's recommended by people that know what they're talking about, then you'll be in pretty good shape to use this method to get into the coins. So what I'm going to show you here, I'll go back to this other screen, is I'm just going to show you a graph. If you're not into graphs and algorithms and red lines and blue lines and numbers and all that stuff, it's okay. What we're looking at in this particular case is natural movement of something. So if you're going to buy into Bitcoin, if you're going to buy into Litecoin or Ethereum or whatever it is, and you want to get the timing right, for one thing, you just want to make sure that it's a healthy coin that has a future and it has good technology, and you can read about that from a lot of other people that know a lot more about the specific coins than I do. But from a math perspective, from a graphing perspective, a pretty good guideline is is, you'll see these charts and these things go all over the place. If you see a long trend that travels horizontally, or within a fair range, and you see a little hiccup in the graph, usually there's some kind of activity here that's testing the coin. So there might be a new development about the technology of the coin or the popularity of the coin or something like that, and it'll cause it to spike up. Naturally, when that happens, the people that have been holding it for months and months see this big jump and say, okay, it's time for me to get out. And then there's a natural sell-off. When you see a spike like this and a sell-off that is, pretty much just as steep, what you're looking for is what we'll call like a 50% retracement. If it goes up like this on news or whatever it is, drops and then regains 50% of that within roughly the same interval, and keeps going, then it has survived the shock. The news might be true, the development might have come through. It's just generally a healthy situation when you have something that drops on, spikes and then drops. If it comes back to more than 50% of that drop, it's pretty well validated. And this was really honestly just a random chart that I pulled off the internet that shows what happened after this 50% retracement, and it actually got tested again here before it went up. So this would be the pattern that you're looking for. If you see something that looks popular or something in the news, you're reading something on Reddit, somebody's talking about something that you've already had an interest in, and you go to the chart and you're actually looking at it for a buying opportunity, you'll want to look for something that is solid, something that has a good growth curve, something that hasn't grown really too fast, but even if it's growing fast, you'll see on like a daily chart or a weekly chart these patterns that are going to show you how strong the fundamental is behind it. So you look for this drop. If it retraces at least 50% and keeps going, then you're probably in a safe place anywhere in here to go ahead and buy this. Even at this mark right here, you're still in pretty good shape to go ahead and buy this. Now, first things first, if you're going to get into this for day trading, I don't recommend listening to me. I don't recommend the day trading of these coins. I don't recommend day trading of anything. In fact, you can use the same fundamentals that we're talking about here for the sake of getting into stocks or anything else that you might want to speculate in. But the one main rule that you want to keep in mind is that you want to keep your emotions out of it. There's a certain methodology where I'm more or less just going to say let's follow the rules of the road. There are in these things certain on ramps and off ramps that you should know ahead of time that are going to happen, that you're gonna watch out for and start following the instructions, or else you can end up in a place like this. You don't want to pull on and off the highway in between things and not wait for the right exit points. You want to follow a strategy ahead of time where what your plan is ahead of time, so that you don't, so you're not making irrational moves or judgment calls on what you're planning to do. So I lost my slide, but anyhow, there it is. So the easiest way off the road is a nice smooth off ramp that you plan for. So what are these off ramps? How do you know when you want to get out? Well, if the value of the coin is going up, you're in good shape to set a goal ahead of time. If you're going to watch it and if you're going to keep an eye on it for a period of time, then you set a goal. I want to make 15%, or I want to make 20%, and then I'm going to get out, and that's okay. If you make 15 or 20% on your money at any point in time, you've outperformed just about everyone in the market, and you can pat yourself on the back. Even if it goes up and doubles or triples after that, you've still accomplished what you were after in the first place. So it's not, you just want to keep the emotion out of it. So if so on the other side of the coin, if you want to know where to get out, if something is on its way down or seems to have fallen a lot and you want to get out and move into something else, then what we're going to look at is another form of the chart where you're going to see support and resistance lines. So let's say that this is running backwards and the curve is going this way or whatever. You want to look at points where there's been resistance in the chart in the past. So here it goes boom and it runs into this, and then it trails off for a little while, and then it goes boom, changes direction, boom, changes direction. When this happens in two different points like this, what we call these is resistance and support. So if something is on its way down, in other words, if this graph were running the other direction, we could identify, in all these accounts and exchanges, they have graphs where they'll automatically draw these lines for you, and you're just going to want to look for places where the price has made turns in the past that intersect with each other on a horizontal axis. So, so in this particular case, this price range right in here is in that area that we're talking about. So if, like I said, if we're running backwards here, then let me switch tools here to get that off of my screen. No big deal. Anyhow, so if this is going to run backwards on us, there we go. See you later. Well, that didn't work so good either. That's what I get for being in a hurry. So anyhow, so if this curve is actually headed this direction, would be a better example. You'd look for the history, or let's say that this starts to creep down, and this thing starts to creep down and it creeps down. Then you're going to look for this thing to bounce off of this line and go back up. If it bounces off this line and goes back up, then that's a point of resistance. Sometimes it can go a little bit below the line and then come back up, and then sometimes that's a turning point where it goes down. So if you're looking at this from a risk perspective, you see this thing at 10,000 and change, and it starts to creep down and it starts to create a steep slope like this, then you're going to try to make a decision around 7,700, somewhere in this neighborhood, depending on what the behavior is. If it crosses this line and keeps going down, it's probably a good time to sell. If it bounces off and keeps going, you're still in a safe position to sell, but you could probably still hold it for a little while and see what else it might do. And you can look at long-term charts, short-term charts, and you can find these points of resistance and support all over these charts, and they're easy to identify, and so you don't have to guess, well, if it loses another $5, if it loses another $50 or $200, how do I know it's not going to cave in? You'll know that moving forward in the future, it's going to bounce off of these points and find resistance, and it's going to evaluate itself for you along the way. So that's that's a general guideline. You just want to plan ahead of time when what your objective is, how much your risk tolerance is to lose money. If you're buying it long term, I suggest you just buy. Like I said, just buy a handful of these and just hang on to them and put them in a wallet, or wait for your gains to come in. This is an actual graph off of a spreadsheet from last week. I had a handful, went up 81%, 20%, 38%, 18, 14, and I went ahead and just unloaded these because the time was right and the numbers worked. Half of them kept going, and I don't regret not staying in them. They met the requirement that I went for. these three in particular blew away what I was after for the 20% mark. So I was really pleased with that. And I'm not disappointed that some of them went on to go higher after that. It doesn't matter to me. I'll wait for another, I'll wait for another entry point to get back in, and just look for these healthy places where I can get back in and go for another ride again. But again, if you're planning on just socking away a couple $100 or $1,000 or whatever it is, then you're not going to be that concerned with these things. You'll buy into these things, and this graph is going to be years in the past or months in the past before you should really be concerned about them anymore. Honestly, you can put them in I recommend you put them in a digital wallet, close the browser, and forget about them for a period of time and just see what happens. And then in the meantime, as you come along and accumulate more Legos or change or whatever, then you can follow the same thing and get back in, and you won't miss anything out of your home economy. You won't miss anything really out of your pocket. This money isn't making you anything right now, and no matter what your income or savings level or anything, there's always an amount of money that you would not miss, or there's a cache of money somewhere, like in this change, or in old savings bonds that aren't making anything, or just all sorts of things that where you have money wasting away that's not doing anything, and meanwhile everybody's all hot on a new technology, a new currency, where you have a potential to make a lot of money, or in the very least, some pretty modest returns over the course of the next few years, just to buy and hold them. So anyhow, I hope that this is somewhat informative for you, and just follow the rules, keep your emotions out of the situation, and look for your good places to buy if you want to. If you're going long term, you just go buy the stuff anyhow, and it's really just that simple. Just follow the rules, follow your exits, and enjoy the ride. Thanks a bunch.